Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, August the 9th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. Having that out of the way, let's get this on. We've got a couple of economic data points here in the United States. We've got preliminary non-farm productivity. Came in a little bit higher than expected at 0.9%, was expected to be 0.7%, and that is not really good for the overall economic picture. We also got preliminary unit labor cost pushing a little bit lower. Again, not very good. Unit labor cost being lower at 0.6%, was expected to be 1.1%, and then they revised last month's number down from 3% to 2.2%. So labor unit cost going lower, meaning that the labor force isn't getting paid. And then we got final wholesale inventories month over month came in at 0.7, higher than the expected 0.6%. Also, crude oil inventories getting a big drawdown at 6.5 million barrels versus the expected drawdown of 2.6 million barrels. So that should cause crude oil to move higher, which it is. It's teetering in and around that $50 mark. It tried to go up there to test it, came up well short of it, and causing the time frame on this market profile to move down right lockstep with where the volume is. So that's really building that magnet, if you will, where crude oil is going to want to kind of really stick as the bulls and bears kind of fight over that whole area. With the 200-day, the Fibonacci level, it's really going to take a lot to move out. You would think that that big drawdown in crude oil inventories would be a catalyst to get that moving, but it just is kind of stuck in the mud right now. So the economic numbers coming out today probably weighing on that a little bit. Also, the tensions in with North Korea moving higher. Late in the day, we saw yesterday the market just kind of implode. When I did the market commentaries, we were near the highs of the day off of the economic data, remember? And after that, almost as soon as we got done, the market kind of imploded. So I stayed away from any earnings trades based on that, not knowing what today was going to bring. I mean, we could have really good economic data points we could have really good earnings numbers coming out, and those stocks that I was looking at are very travel oriented. PayPal being one of them that's huge in China and overseas. That would really affect their bottom line if there were tensions between North Korea and China and things of that nature. So I decided to stay away from that. Same with Disney. There's nuclear tensions. There is going to be very crimped traveling on anybody's part. So just decided to stay away from any earnings, which is why you didn't see anything tweeted out from me yesterday on those earnings calls. But anyway, crude oil kind of stuck in the mud here, probably being affected a little bit by those tensions. Gold moving higher as there's a bit of flight to safety. Gold should move higher in those kind of tension type situations. That's allowing it to kind of blast off today, up over almost 15 points. It was up over 15 points and blew through the 61 Fibonacci level. It's kind of come back down a little bit. But at the end of the day, this is the levers and pulleys of the economic picture happening in the overall equity markets. Bonds, again, we're up well over a point, almost 2 points earlier today. They're up about a point right now. It's 31 bidded even in there. So bonds moving higher, as if there are global war type situations, especially on the magnitude of nuclear type of situation, that would cause the overall Fed to want to lower rates, which would make the bonds want to tick up. It's a lever and pulley. Interest rates go down, bonds go up. It's kind of like the teeter-totter. It just does that, all right? So bonds moving higher based on that flight to safety, same that we're seeing in the gold. But those markets were coming back, gold off of its highs, bonds off of its highs, as the equities kind of started coming back, and very close to unchanged here, as we can see in the E-mini S&Ps. Got my charts a little bit out of order here, but E-mini S&Ps up, down slightly, but up from off the lows. We look at the NASDAQ. The NASDAQ also, in negative territory, but it's a green candle because overnight opening was a little bit lower than we are currently. So, and that was also based on that overall tensions that we saw. So I got two of the E-mini S&Ps here. Sorry about that. So this is the E-mini S&Ps still negative on the day. Here's the breakdown of the E-mini S&Ps. This is what I was talking about yesterday when we were talking and releasing this video. For the most part, it was kind of right around in this area, and then we just got this slam down like right after I got done shooting the video. Got a little bit of support while I was compressing and getting this ready to send out, and then right after it was released, we got the slam down. Overnight continued lower, but this is why some of those candles are a little bit green, because now we're starting to get a bit of maybe a dead cat bounce is what we used to call it. You get that big slam down, you get some profit takers, and then resurgence to the downside. So I'm going to be looking to add more short deltas to my portfolio as this kind of unfolds. I'm a little bit long in the deltas, so I'm going to be looking to add short deltas to that, or at least more short deltas to that. I'm feeling like I'm very delta neutral at this point. All right, so with PayPal, I talked about trying to take off these trades yesterday, and PayPal I have in my IRA as a spread in PayPal with the trading margin account. I had it in as a naked strategy, and you can probably get out of this even a little bit better as of today. But I had on the August, sold the 58 puts originally for 77 cents, bought them back for 29 cents yesterday. With those PayPal, bought those back yesterday for 29 cents. You can probably get those back a little bit better than what I was able to get out of them. And then in the IRA, if you remember with that one, I had on the August and was short the 58 puts and long the 57 puts to define that risk. I covered that, or originally sold that trade for 28 cents, bought them back for 14 cents yesterday. I talked about that. I was trying to get that 50% of my max profit in there. So I just left it in there and ended up getting hit on those. So that worked out nice. But today, you probably do a little bit better than what I got out on those. XRT, just got out of this one today, especially on that. You might be able to get out of it close to where I got out, but I don't know. The market was much lower when I got out of these, but I had on the XRT, which is the retail ETF, and I was short calls in there. I was short the August 42 calls in there, and I originally sold them for 27 cents, bought them back for 7 cents today. Yesterday I couldn't get out for that bit of a profit. At least I didn't notice it late in the day. I had other fish to fry, I guess. Was trying to decide whether or not to do those earnings. But today on that big move down and the volatility crush coming out of it, you can see volatility really came out of it today. So you'd probably be able to do better. Having said that, if we look at something like the VIX is starting to spike. So for option premium sellers, looking like a good situation. It's coming off again also, but still had a nice spike today. So if the overall market continues to move down, these tensions rise, VIX is going to start spiking, which will give us more premiums to be able to sell. All right, so that's about all I've got for you guys today. Haven't looked at doing any earnings, kind of waiting and see if these tensions continue to rise. And the markets want to continue to sell off, but as of right now, kind of in a holding pattern, just covering some
trades like I did and looking for other opportunities to sell some premium or add negative short deltas negative deltas to my portfolio. All right. Friday's webinar is going to be on the long put butterfly, and I'm going to explain why long put butterfly is a little bit better than the long call butterfly. They're both good both good strategies in a sense. Not my favorite necessarily, but very good strategies, especially for like an IRA. But the put butterfly will act the same as the call butterfly, although we might be able to get a little bit better pricing, and I'll explain all of that in the webinar. That's all I got for you guys today. If you can't take that, take it easy.